it's no longer about the trial, which will happen who knows when, but more about recovery. And so since this story broke November 6th, a lot has transpired in terms of identifying assets. For example, now remember, these are alleged rumors, but it's where there's smoke, there's fire, because the regulator has not released the trading records yet from each of the accounts. But here's what we got so far. And obviously, I'm an active participant. I've got my own army of lawyers like everybody else does, both as an equity shareholder in both FTX International and FTX US, but also had over $10 million in assets inside multiple FTX accounts, which were scraped with no trading records left. So let's go first to recovery. It looks like the Bahamian government has $4.2 billion sequestered. And then there's another $1.2 billion alleged to be sitting in the US, FTX US, another $400 million of cash. But now what everybody's focusing on are all the assets inside of Alameda. Remember, Alameda bought a lot of stock, a lot of deals. They own a ton of Robinhood. They have a bunch of other assets in public companies. They own a piece of WonderFi, for example. And so all of these are being looked at by hedge funds and high net worth individuals and private equity firms, because in order to sell Alameda, which will be done in an auction process, you need a first bidder, a backup bid. And that's going to end up being somewhere in that $800 million to $1.5 billion range. That's sort of the bid ask right now on that. So there's a ton of cash sitting around here. And so I have to be, I'm always optimistic, but before this whole thing plays out, there's going to be some recovery. And I don't know how long that's going to take. But what everybody wants right now that had an account is to turn on the server again so you can see your account, see the trading records, but keep it gated so you can't put money in or take it out, but at least see the records before April 15th when everybody has to pay their taxes. And so you got a lot of cross currents going on, but nobody's talking about Sam Bankman-Fried anymore or the trial or alleged fraud. They just want the money, and that's the way it should be.
Bitcoin spent Thursday in a fretfully uncertain mood, teeter-tottering below and above $24,000 as investors continued to evaluate the U.S. central bank's ongoing dialogue about monetary policy and jobs data suggesting that inflation would remain problematic. Hello and welcome to Money Talks. In today's video, Kevin O'Leary, investor on the television show Shark Tank, discusses the collapse of the FTX exchange, his exposure to the meltdown, his view on Sam Bankman-Fried, and whether or not he intends to continue investing in cryptocurrency.
But the real question is, will this change how we invest? And the answer is no. So let me explain why. FTX was a startup, a big one, but a startup. And we all invest in startups. I don't care if you're private equity or you're venture, there's capital around for startups because the returns, if you get a successful deal, are extraordinary. So if you look at data back from 1954 in the Boston area where venture capital started, and you look after all those decades, 8 out of 10 deals either fail or are living dead, and 2 out of 10 are extremely fantastic outcomes and pay for all the other 8 mistakes times 20, times 30, times 40. So for every FTX, there's a Google. For every Lehman Brothers, there's something else. There's always something going to zero and something going to the moon. That's just the way it is. And so when you look at due diligence, you ask yourself, okay, let's say we had done more due diligence. Would that change the outcome when 80% fail? Probably not. Now, they fail for various reasons. In this case, alleged fraud, and we'll see how that plays out. But this doesn't change anything about the way I'm going to invest or, how any of those other firms you just listed are going to invest. And the diligence done here, I don't know if you know this, but Tiger spent millions with Bain Capital to diligence this platform before they became one of the lead investors. And everybody knew that. So there is a lot of, when a deal like FTX US comes out and it's so hot to get an allocation, they're not worried about due diligence because they know 8 out of 10 times it's going to fail. They're hoping they're going to get one of those unicorns. The one thing I'm very, not proud of, but happy about, when the FTX US deal, when the word got out that I got allocated equity, I got inundated by institutional capital, high net worth hedge funds saying, you got to give me a piece of your allocation because you owe me. We've been doing stuff together 20, 30 years. But I had this gut feeling, not that I was involved in something nefarious, but it was so nascent, so early, so volatile. I said, no, I'm not going to put anybody else's money in this thing. I'm going to keep my own dough in it. That's it. And whether it's a success or a failure, I'm not going to put someone else in front of that freight train. Either way, I am so happy I did that because other people that are managing other people's money that put it in FTX are getting litigated in both directions. I'm not one of them. I look like an idiot by myself. That was all my own money. It all went to zero. It was all in my operating company, of which I'm 100% owner. So the operating company took a hit. I hate losing $18 million. It really pisses me off. But, I've had great investments and I've had bad ones. This goes in the bad column. And does it change the way I'm going to invest? No, doesn't. Got up in the morning, got right back to it.
The largest cryptocurrency was recently trading at 24,052, down 0.4% over the past 24 hours, but well off its earlier week high over $25,000. Still, analysts remain cautiously optimistic about BTC's prospects after watching it surge about 40% since the start of the year amid an improved overall economic backdrop. People feel that the worst may be over in terms of bad news that we had in the crypto sector last year, and that's why it's Bitcoin more resilient.
Yeah, John Ray testified in front of the Senate a few weeks ago. I testified there as well. What everybody's waiting for are the trading records. So if it's alleged that transactions occurred between Alameda accounts and FTX accounts and clients' accounts, the alleged so-called trades, then show the records. Everybody wants to see them. And so obviously these records are going to have to come out before a trial. And I think because we're in this discovery period in this trial, maybe it's going to take a while to get them out. But, when people tell me did that happen or not, well, show me the records. I mean, like everybody else, we're going to see the records. And they exist. Apparently, they're backed up on the AWS service Amazon has, and we've got to get them. So Ray's under quite a bit of pressure right now by account holders. You make a claim like that, you got to show the records. And so let's see them. Now, to your point on regulation, if there's any silver lining to this whole FTX thing, and let me tell you, when I went down to those hearings in Washington, when the hearings were over, they take about 4 hours or so. All the senators are still there. So we started, we mingled, we started talking. Here's what I realized about this. These senators are they're fatigued. They're really tired of gathering every 6 months when the next crypto company blows up and goes to zero. I mean, just last week, Genesis filed for bankruptcy. Every week, there's another one going to zero because they're totally unregulated and they keep issuing tokens that are worthless. The latest, game that FTX did as well as Binance is they issue a token that supposedly gives you some special ownership of the platform. That's not true. You own nothing. There's no rights to it. It just gives you trading discounts if you own the BNB or the FTT token. But if you look at, let's say, the reason FTX went to zero is CZ, the competitor of FTX, Binance's head guy, put 550 million tokens right on Sam's lap on November 6th. He couldn't carry it. He didn't have 550 million cash. They had to go to bankruptcy. And I think it was a brilliant move on CZ. He wiped out his competitor. But now CZ's got the same problem. He's got regulators humming around him like a wasp around a beehive. And he's got $64 billion worth of BNB tokens in 2 wallets instead of 97% of all the allocation. What happened? I don't know who owns those wallets. Nobody knows. Nobody knows who owns Binance anyways. But what happens if one of those wallets, somebody wants to sell $30 billion worth of tokens, just like they put them to Sam Bankman-Fried? That'll be the sound of Binance going down the toilet. So these things are going to keep happening over and over again. And my point about regulation is the senators, well, they're pissed. And you ask me why Gensler is coming down heavy-handed on Kraken last week and shutting down staking and telling every player in the industry in the U.S., read the room. I just whacked Kraken for $39 million fine. Who's next? Bring it on. So that kind of environment is getting very, very aggressive. And the regulators are being applauded on by the senators and congressmen and women who are saying, what is this? We've had enough of this stuff. So I think the good news for me as an investor, frankly, to turn this into a positive story, would be that I own regulated exchanges. WonderFi is regulated. In Canada, it's regulated. I think the value of regulated exchanges is going to go up over the next few years, while all the unregulated ones get put out of business or go to zero by the regulators. So that's where we're at in crypto. You got to get on board on regulation. You got to stay out of the way of Gensler at the SEC and other regulators. Those hombres in Washington are not happy. And they poke the bear. FTX poked the bear. The bear's awake, and it's pissed.
So, do you agree with Kevin O'Leary that auditing will reveal the truth about FTX collapse and the disappearance of money? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.